We want to thank God for this wonderful day. And shall we pray as we start our 16th annual general meeting? Our Heavenly Father, we want to thank you this morning and bless your holy name. We thank you for this wonderful day that you have given unto us. As we gather together from different locations in this Equity Group Holdings 16th annual general meeting, how we pray that your heart be upon each one of us and all the shareholders wherever they are. We want to thank you for you have been gracious to us all through the years, and this we know because of the growth and the blessings that we have enjoyed all from you. As we continue in this meeting, we want to pray that your blessing hand will be upon us and all the facilitators. Give us a wonderful meeting for the glory of your name. We bless this meeting. For this we pray in Christ Jesus our Lord. Amen.
Thank you, Bishop Kariuki. Dear shareholders, ladies and gentlemen, my name is David Ansel, Chairman, Equity Group Holdings, PLC. On behalf of the Board of Equity Group Holdings, PLC, we welcome you to this 16th Annual General Meeting. Thank you all for taking the time to be with us today. I speak to you today during very unusual circumstances. It's highly regrettable that we could not meet in person this year. This has been necessitated, as you are all aware, by the health protocols that the government has issued to control the spread of COVID-19. As such, movement has been restricted and social distancing prohibits the meeting of more than 15 in one gathering. This is the moment for solidarity that requires each one of us to take responsibility and play our part. We are very pleased with your registration and participation today, which attests to your continued interest and support for Equity Group Holdings. 2019 marked 35 years of operations for Equity Group. I was privileged to preside over the celebrations that marked our outstanding 35 years of creating value for our shareholders by transforming lives and livelihoods. This year was also significant as we took time to reflect on our journey over the past 35 years and to envisage the future. These reflections also informed our brand transformation as part of our repositioning the group for the future while celebrating the past. The result is a new brand identity that communicates our resolve, focusing on simplicity, boldness, and confidence. In view of the ongoing coronavirus COVID-19 pandemic and the related public health regulations and directives passed by the Government of Kenya and the Ministry of Health, which preclude, among other things, public gatherings, it was not advisable for the company to hold a physical general meeting in the manner prescribed in the company's Articles of Association. On April 29, 2020, the High Court of Kenya, in miscellaneous application number E680 of 2020, made under Section 280 of the Companies Act 2015, issued an order granting special dispensation to any company listed on the Nairobi Stock Exchange to convene and conduct a virtual general meeting, subject to receipt of a no objection from the Capital Markets Authority. Consequently, we had to seek regulatory approval, which was granted, to hold this meeting via electronic means. Indeed, we have now proposed the necessary amendments to the current Articles of Association to enable participation via electronic means going forward. As a company, the group has worked diligently to secure the health and safety of our staff, customers, and stakeholders from the onset of the pandemic. The organization swiftly put a business continuity plan in place to ensure the group's financial services would seamlessly continue for our customers while keeping employees safe. Equity Group is supporting its clients and customers to to ensure their businesses survive the crisis, recover, and thrive post the COVID-19 pandemic. Clients who demonstrate the impact of COVID-19 on their businesses and the soundness of their business model in the new normal will receive a reprieve of loan rescheduling and refinancing with up to an additional 3 years of repayment. As you may recall, during the release of the group financial results for the financial year ended December 31, 2019, it was announced that the board had resolved to recommend for your approval at the upcoming general meeting the payment of a first and final dividend of Kenya shillings 250 for each ordinary share of Kenya shillings 50 for the year ended December 31, 2019. Subsequently, the board considered the events that have taken place since the financial results of the company for the year 2019 were released, and particularly considered the effects of the COVID-19 pandemic after careful consideration, and I mean careful. The board resolved not to present the proposed dividend recommendation at this general meeting. In addressing the crisis of the COVID-19 pandemic, the board wishes to exercise maximum financial prudence so as to conserve cash to enable the company to respond appropriately to the unfolding crisis. The board shall continue to evaluate the potential impact of the pandemic on the group. In this regard, the board will, in the usual manner, ensure that it keeps you, the shareholders, duly informed. Dear shareholders, I shall now introduce the directors and professional advisors who have accompanied me in this general meeting. To my immediate right, Professor Isaac Macharia, Vice Chairman of the Holding Group. To my immediate left, the Group Managing Director and CEO, Dr. James Mwangi. To his left, Mrs. Mary Wamai. To my further right, Mrs. Christine Brown, the Company Secretary. To my further left, Mr. Richard Njoroge, the partner of PricewaterhouseCoopers, our external auditors. And to the immediate right, Mrs. Rosa Ndwata Matera, the partner at Anjarwala and Khanna Advocates, who have helped me with this meeting. Thank you. Ladies and gentlemen, I would also like to introduce you to our esteemed board of directors who cannot be with us in person today by this short video. I also wish to acknowledge image registrars and Mrs. Rosa Ndwata Matero for their support in actualizing this virtual meeting. This meeting has been convened to conduct the business as set out in the published notice for the AGM. I shall now request the company secretary to confirm the status of the registration and confirmation of shareholder participation through electronic means.
I confirm, Mr. Chairman, that there is a quorum for this meeting. Thank you.
Thank you, Madam Secretary. I hereby declare the meeting duly constituted and open. We have 9 items on the agenda to cover today. I will now ask our company secretary to take us through the agenda of today's meeting.
Thank you, Chairman. The notice convening the meeting was published to all shareholders in the local dailies and through the company website. The notice is contained on page 11 to page 15 of the integrated report and is hereby taken as read.
Shareholders, the 2019 integrated report and financial statements were made available to all shareholders through the company website as indicated in the notice convening this meeting. The chairman's report was published in the integrated report and published on the company website. My report is contained on pages 18 to 21 of the integrated report and is hereby taken as read. At this juncture, I wish to invite the Group Chief Executive Officer and Managing Director, Dr. James Mwangi, to present his report to you for the year ended 31st December 2019. James.
Thank you very much, Mr. Chairman. Dear shareholders, we're happy that you are able to join us online for our 16th annual general meeting. We truly regret that we are not able to be and to meet in person for our annual general meeting, as is our tradition. This has been occasioned by the unprecedented circumstances caused by the global COVID-19 pandemic, and which is evolving into an economic meltdown triggered by global shutdown and disruption of global supply chains. Shareholders, if we go back to the performance of last year, we had a robust year with our assets growing by 17% despite the difficult situation occasioned by continued application of interest capping until the beginning of the fourth quarter. Not only did our balance sheet grow by 17.5%, driven by a 14% growth in customer deposits, but the bank continued to be the safe, secure place for deposits and anchored an 18% growth in shareholders' funds for long-term sustainability. The bank demonstrated adoption to interest rate capping as net loans registered a 23% growth, a capability that positioned the group strategically in a liberalized environment occasioned by the scrapping of the interest rate capping in Kenya. When turned to the profit and loss, despite the interest capping at a maximum interest rate on loans of 13%, the group maintained a strong momentum of top-line interest income growth at 12% and 9% net interest income. Non-funded income registered 19% growth, reflecting success in execution of the group's strategy of strengthening non-funded income contribution. Main growth registered was mainly in merchant banking at 13%, diaspora remittances at 7%, and forex trading at 9%. Strong cost control with a 13% total cost growth, strengthening of the group performance. That cost excluding provisions grew by only 9%, below the 13% growth in total income. Loan provision grew by 51%, in line with the group's strategy of adopting a conservative approach as interest cap rating got lifted. Looking at the future, the effective tax planning, very effective tax planning. So effective tax rate come down to 28.5, with profit after tax registering a faster growth of 14% to 22.6 billion shillings, up from 19.8 billion, raising earnings per share up to 5.93, up from 5.22 Kenya shillings. As requested, the director had proposed a 25% increase in proposed dividend, which was withdrawn post-balance sheet events relating to uncertainty associated with COVID-19. Dear shareholders, despite that constrained operating environment, the group continued to perform well as the bank with the highest market capitalization. Dear shareholders, we owe you a duty of explaining the withdrawal of the proposed dividend, which had been increased by 25% to 2 shillings and 50 cents. And I want to take the next few minutes, our dear shareholders, to explain the events post the balance sheet date of 31st December 2019. The year opened with a global economic crisis, a recession expected to be worse initially and expected to recover much weaker. When we look at the IMF projections, 2020 was expected to register a 3% GDP growth rate. That was the prediction in January. By April, the World Bank had changed their prediction from a growth rate of 3.3 of the world GDP to negative 3% growth rate. A change of over 6.3% growth. As at June, the World Bank has reviewed its projection to negative 4.9, suggesting a deterioration of economic growth rate of nearly 8.2% in a span of 6 months. Sub-Saharan Africa was projected to grow at 3.5% in January. By April, the World Bank had adjusted that to negative 1.6. As at this month, they have adjusted that down to 3.2% negative growth rate. That reflects the uncertainty that has confronted the world. And it's this change that caused the board to reconsider and opt for prudence. Coming home, moving from the global scene back to the country, the Kenyan economy is expected to shrink for the first time in 27 years, according to the IMF. Leaders have cut GDP forecast to 0.3 contraction from 1% prediction in April. Kenya's economic growth for 2021 is now projected at 4%, having contracted from 5.8% to 0.3%. The Kenyan economy will contract for the first time in almost 30 years, according to the International Monetary Fund. That is the uncertainty, shareholders, your board is confronting and choosing to be prudent and to be conservative in making decisions. IMF sees the leaders' gross domestic product shrinking by 0.3 in 2020 compared with April's projection of 1%. And that is the first annual contraction since 1993, which was occasioned by the elections of 1992. The coronavirus pandemic and measures to contain its spread have taken their toll on the Kenyan's economy. Key foreign exchange income earners have been squeezed with lockdowns in major export markets that wilted horticultural shipment, lower remittances from Kenyans abroad, and travel restrictions that weigh on our tourism. Export of flowers, of which Kenya is the biggest supplier in Europe, jumped 23% in May as orders started to return almost to normal. In addition, shipment of black tea, Kenya, which is the biggest exporter, jumped 15%. So there is hope, shareholders, that all is not lost. The world is adjusting to the new norm post-COVID environment. When we look at the grosser look of the future, IMF and the World Bank has revised their projection for 2020 global growth, which will be the worst since 1930 Great Depression. However, 2021 promises a possible bounce back of the global economy, but with many assumptions that a vaccine against coronavirus will have been found, and pharmaceutical solution of medication will have also been resolved. With those assumptions, if they hold, then we'll see the world gradually starting to recover. Going forward, 10 million people around the world has already contracted coronavirus, which in just 6 months have become the 7th deadliest outbreak these centuries. As countries open up from lockdown, cases continue to rise, causing risk of a second wave, with the current average global daily cases now reaching 150,000 infections, above April average daily cases, which were just 100,000. Shareholders, we are living in uncertain times. We have seen global response, which the lockdowns have costed the world 11 trillion shillings in fiscal stimulus, and regulators prohibiting banks to pay dividends. 213 countries and territories have confirmed coronavirus cases and have undergone some form of lockdown and quarantine measures. The global economic measures to support lost output includes the IMF predicting 12 trillion shillings of lost gross domestic product in the world, which is equal to losing the entire GDP of Japan, Germany, and India put together. This loss of 12 trillion shillings in global GDP is in spite of the global fiscal stimulus of 11 trillion shillings. That is the ravaging impact of the coronavirus pandemic to the economic well-being of the global population. The monetary policy has been accommodative, with US Fed rate expected to remain at 0.25 basis points, showing how much governments are going to pains to ensure revival of the global economy. It's this uncertainty that confronted your board, and they had to make a decision that would position us not only to survive, but to quickly recover as the world recovers and hopefully thrive. And as they say, the board will have turned this crisis into an opportunity, and they will not have allowed the crisis to go to waste. Though that is the difficult situation the board that has been confronted. Since making that decision, the world has gathered more information, and global bank regulatory response has been to prevent banks from paying dividend and conserve capital. The United States Reserve Bank has prevented American banks or US banks from paying dividends. ECB has ordered European banks to freeze dividends. United Kingdom banks will not be paying dividend until the end of the year. Reserve Bank of India has barred banks from paying dividends. And closer home, the Reserve Bank of South Africa has advised banks against paying dividends. And in the markets that we are operating, the Central Bank of Uganda and Rwanda has also barred banks from paying dividend. So I would say our board had foresight and was ahead of the curve in analyzing and appreciating the magnitude of the impact of COVID-19 as they withdrew dividend. Equity's response to COVID-19 has been swift and strategic. The first response was making decisions in uncertain environment and managing the entire group in uncertain times. In March 2020, the bank incentivized the use of electronic transactions to protect customers from and encourage them to maintain social distance and to do their transaction online. We waived the fees on mobile transactions to encourage avoidance of cash. That has costed the bank 120 million shillings every month in forfeited income. Same March 2020, social distancing measures were adopted and most of the bank staff started working from home and on a rotational basis, while Equity Afya clinics started screening temperatures for all staff, customers and visitors entering bank premises. In April 2020, support for online workers was initiated by Equity Group Foundation with the bank's with a contribution of 1.1 billion shillings put together between Equity Group Foundation and MasterCard Foundation to support COVID-19 efforts in the country. We are happy to report that that initiative will see 68 hospitals dealing with COVID cases provided with personal protective equipment for all medical staff. In June 2020, we supported access of education to the Wings to Fly scholars who were at home. Equity Group Foundation and MasterCard Foundation partnered to support 14,600 students to access education at home by providing them with the solar panels to enable them to read, a charger to enable charging of phones, and a stipend of 3,000 shillings per month to ensure they maintain learning as if they were in school. Secondary school scholars were adequately provided to ensure, like any other kids, while home, they continue to access lessons aired by Kenya government-owned radio and TV stations. As we moved on, in June 2020, a wellness program for healthcare workers was initiated. The COVID-19 Fund and Equity Group Foundation, partnering with the Kenya Medical Association, launched a case management training and socio-psycho wellness program to support 50,000 public health workers. In June 2020, in support of production of PPEs within the country, Equity partnered with the Kenya Association of Manufacturers and initiated a training executed by the global renowned consulting firm of McKinsey to support 95 manufacturers to produce world-class PPEs in the country. I'm happy to say 9 of those manufacturers have been certified to have met all the global standards, and now Kenya has reversed its global value chain of PPEs from an importer to an exporter with capacity for self-sustained supply, not just in Kenya, but in the region. We witnessed the distribution of the PPEs, and I'm glad to say Kenyatta National Hospital and Bagathi Hospital will be receiving their PPEs tomorrow, and board members will be going to witness that milestone. We are looking forward to be able to provide PPEs to the entire public hospitals covering the COVID-19 patients for a period anticipated or expected to be 18 months. Moving forward, we look at proactive decisions that we have made in this uncertain environment. The first one in March 2020 was to reduce the cost of financial transactions by waiving all fees to enable and to incentivize our customers to go to mobile transactions so as to comply with the medical protocols that had been issued. So far, as per May, June, we have accommodated customers who required relief over the COVID period by rescheduling their loans and providing a restructured repayment programs, with some of them giving them breaks of payment of both principal and interest for up to 30% of the entire loan book. Proactive capital management in May 2020 has seen a right of assessing what will be significant macro uncertainty and challenging operating environment. And the bank is considering it's prudent to preserve capital and liquidity, and that explains why in May, the board recommended the withdrawal of the dividend payment. This demonstrates the commitment of the shareholders to support the customers who have enabled the bank to pay dividend since 2005. So for the last 15 years, our customers have supported us year in, year out, and we have been able to pay dividend to the shareholders. And the board, in its wisdom, felt this was a year that we could bend backwards as shareholders and support our customers so that they could recover and continue to support the bank. Second reason why we had to withhold dividend was to show and demonstrate to parties that were support the bank, because with an anticipated period of 3 years, the board felt it wise to enhance its liquidity and credit quality through credit guarantees. And we anticipate we shall be able to get up to 50 billion shillings of liquidity through debt, like was demonstrated yesterday by the World Bank, releasing 5 billion shillings to support entrepreneurs and SMEs, particularly during this trying time. So the forfeiture of dividend, or withdrawal of dividend for that matter, was a good gesture to all our partners that we were also in need as we called on them to support our customers. In 2020, proactive capital management is consistent with the bank's effort to support existing customers by preserving capital and liquidity. The bank withdrew from discussions with Trasmala to ensure that the dividend withheld is restricted to being used to support customers, not for expansion for the time being. The second aspect or the final aspect was to make equity the safe harbor during the storm. As we all acknowledge, the COVID environment creates uncertainty with nobody who could be able to predict when it will end, because most of the assumptions made are yet to be tested. We entered the COVID environment with a liquidity ratio of 52%, a loan to asset ratio of 55%, and a loan to deposit ratio of 76%. I want to say these are strong defensive liquid balance sheet items that make us confident that we can be able to support our customers for a period of 3 years. The total capital ratio is at 21%, while Tier 1 ratio is 17.5%, far above the minimum statutory ratios. So we are entering this phase from a point of strength, and that is what capital fortification and liquidity fortification are meant to the customers. And we can see a focus again to strengthen the bank by focusing on quality of revenue streams, focusing more on non-funded income as opposed to interest income because of the risk of provision. So the bank continues to strengthen itself and to position itself to be able to ride the negative impact of the coronavirus. And in the medium term, the focus remains growth and social transformation. We have not forgotten the essence and the purpose for which this bank or group was formed. So social transformation continues to be significant, and strategic positioning, where necessarily offensive strategies have been maintained. And I want to also confirm that the board is at the tail end of closing our transaction in DRC that will position us in a country that has a very low credit penetration of about 10%. And we hope that by acquiring BCDC, the second largest bank in DRC, positions Equity Group to be the largest bank in Democratic Republic of Congo within a period of 18 months, creating enormous value from the transformation through financial inclusion in that country in the medium term. The second aspect of medium-term and long-term opportunity growth we see is insurance. COVID has brought uncertainty. Uncertainty is always dealt with through insurance. So we see the low insurance penetration in Kenya of only 5% as a huge opportunity. We believe Kenyans will now be more conscious of the need to have long-term savings, to think about life cover, to think about insurance in everything they think through to protect themselves. We want to provide Kenyans with a solution to protecting themselves, and hence the decision of the board to register an insurance company to support Kenyans to protect themselves. Equity continues to think broadly about the purpose for what it was created, to transform lives and livelihoods. I want to confirm the foundation has enhanced its participation. The World Bank, through the Kenya government, has granted us 18,000 new scholarships to scale up the Wings to Fly program. And we now see us reaching 36,000 young Kenyans with a full secondary scholarships. Working together with MasterCard Foundation, we have embarked on a program to help retain and create 5 million jobs over the next 5 years, and to support the economy to erode the negative effects of COVID has had in economic front. We continue to provide micro, small, and medium enterprises with the support. And as I said, we're looking at credit guarantee facilities to help us support businesses during these trying periods of COVID environment. Those are the focuses that we continue to make as an organization, and hopefully we'll be able to assure you, as we have assured of the board, of our resolve and commitment to emerge out of this COVID environment much stronger and having consolidated the market. That assurance, dear shareholders, I want to introduce the team that has taken that commitment. From my office is Mary Wamai, the Group Executive Director, here with us. Brent Malley, Group Director of Strategy. That is the team in my office that have made that commitment. The execution of that commitment, the executive team is led by Polycarp Igade, who I would really like to take this opportunity to thank for coming back and providing the agility and aggression that is required in this kind of environment. There is David Gata, our Group Finance Director. There is Lanley, our Group Chief Information Officer. There is Gloria, our Group Human Resource Officer, and John Wilson, who has been really instrumental in helping us assess the risk of COVID and who serves as the Group Chief Risk Officer. And of course, keeping us in check is Bildad Fuamba, the long-serving Group Chief Internal Auditor. Supporting that team to execute at the business is Gerard Waroe in Kenya, Samuel Kirobe in Uganda, together with Anthony Kituka, the Executive Director, the Managing Director in South Sudan, Addis Ababa, and the Managing Director in Rwanda, Huntington Namala, Robert Keboti in Tanzania, Ruben Bindu in managing the foundation, and Celestine managing Equity Bank DRC. Dear shareholders, that is the team that has made the commitment that as a response or as a gesture of appreciation for the sacrifice the shareholders have made to sacrifice their dividend to show commitment in supporting customers. They will do their very best to make the future much better. Thank you, shareholders, for listening to us in making that presentation. Thank you, Mr. Chairman.
Thank you, Dr. Mwangi. I believe that will have reassured the shareholders of this board's commitment to their long-term future. Thank you again. The director's report was also circulated with the integrated report contained on page 22 to page 26, and I submit that it shall be taken as read. I will now call upon Mr. Richard Njoroge, partner PwC, our independent external auditors, to highlight their audit opinion to shareholders.
Good morning, shareholders. I confirm that as PwC, we carried out an audit of the financial statements of Equity Group Holdings PLC, and we have issued an unqualified audit opinion, which is contained on pages 112 to 115 of the integrated report. Ladies and gentlemen, I'll read the opinion paragraphs only. We have audited the accompanying financial statements of Equity Group Holdings PLC and its subsidiaries set out on pages 116 to 224, which comprise the consolidated statement of financial position at 31st December 2019 and the consolidated statements of profit or loss, comprehensive income, changes in equity, and cash flows for the year then ended, together with a separate statement of financial position of the company at 31st December 2019, and the statements of profit and loss and other comprehensive income, changes in equity, and cash flows of the company for the year then ended, and the notes to the financial statements, including a summary of significant accounting policies. In our opinion, the information given in the director's report on pages 106 to 107 is consistent with the financial statements. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the group and of the company at 31st December 2019 and of their financial performance and cash flows for the year then ended in accordance with International Financial Reporting Standards and the requirements of the Kenyan Companies Act 2018. We also report that, in our opinion, the auditable part of the Director's Remuneration Report on pages 108 to 110 has been properly prepared in accordance with the Kenyan Companies Act 2015. Signed, PricewaterhouseCoopers, LLP, 20th March 2020.
Thank you very much, Mr. Njoroge. As highlighted in the published notice convening this meeting, shareholders were granted the opportunity to submit their questions and/or to seek clarifications with regard to the agenda items. I'm pleased to advise that many did. I will now ask the Group CEO to answer the questions, or at least a selection of the questions submitted by the shareholders.
Thank you very much, Mr. Chairman. Dear shareholders, I want to thank you most sincerely for showing great interest in our company. Over 200 questions were received from the shareholders in the last few days. These 200 questions reflect your intimate relationship with your investment, your emotional connection with the group. As staff, we are humbled and we are privileged to have this emotional bond with you in managing your investment. I'll try to answer the most the questions that attracted the highest number of shareholders. And the question that drew a lot of interest was on dividend. And the question alleged, why didn't the board consider a reduction in dividend other than just recording the entire payment? When will the dividend be paid? Is there a dividend or bonus share? And all that kind of questions relating to dividend. Dear shareholders, thank you for this question. We know it's not easy when every shareholder was waiting for their dividend. This was a difficult decision that the board of directors had to take, especially recognizing that this is the time that Equity Group Holding, PLC, could not be paid dividends to our shareholders since we are listed as a public company in 2004. Allow us to explain how the board arrived at this decision. First, we appreciated that our shareholders invest in the company and entrust the board to make prudent decisions for the long-term benefits of our shareholders. In the current COVID-19 crisis, every business has been affected and the economy has deteriorated. In order to ensure our business is well placed for the future, we needed to ensure the bank was there for our customers to keep them going. Remember that it's the customers who do the business with us that enables us to make profits, which goes to our shareholders as a return on their investment. Therefore, we needed to protect our customers so that their businesses and income-generating activities can thrive and survive during this crisis and recover and thrive after the crisis in order to ensure the long-term survival of your investment in the group. Please allow us to share with you the steps we have taken to protect our customers. We have accommodated our customer loan request rescheduling of up to 100 billion shillings. We have waived the fees to our customers amounting to 120 million shillings per month on charges on mobile platforms. We have made arrangements for credit lines and credit guarantees to ensure we have sufficient liquidity, and this is amounting to 120 billion shillings. And the partners needed to see the contribution of the shareholders. We assure you that all these measures will serve our shareholders well in the long run, as it will assure us of sustainability through the crisis period. This is a period of great uncertainty, and every business requires as much as possible to conserve cash to weather the storm. As promised earlier, the board will keep reviewing the situation to keep our investors informed. Most of our shareholders are farmers, and maybe we would reflect on what as farmers we do. Whenever there is drought and we lose a season, we always preserve the grains in our granary to ensure when the rain comes we have something to plant. This is the same that applies to business. The second question of shareholders, again, relating to dividend. Why declare dividend and fail to pay while other banks are paying? Is it legal to undeclare dividends? So again, a pursuit of the same question in a different format. It is true that when our board of directors released results for last year, they planned there would be a dividend of 2 shillings per share. And that was the plan. Unfortunately, the events changed so dramatically after the event, after that statement, that 4 months later, when we are holding this annual general meeting, the environment has forced the board to rethink. So we thank you for this great question regarding the board's proposal to withdraw the the 2019 dividend payout to shareholders. We fully appreciate that every year all our shareholders look forward to their dividend. And as a board, we also derive fulfillment in delivering the dividend as the evidence of effective, efficient, profitable business that we do every year since we were listed in the Nairobi Stock Exchange. The proposal to withdraw the dividend payout was made in the best interest of shareholders' investment in the long term. In some markets like Europe, banks have been advised to withhold dividend during this crisis. In order to assure the long-term protection of shareholders, by assuring the banks can survive this crisis and continue to grow during the crisis. As we all appreciate, the investment by shareholders form a big part of the capital that banks use to do business with customers and make profit, which in turn goes back to shareholders as dividend. In the current crisis, unless we protect our customers so that after the crisis their businesses are still able to operate, then their shareholders' return in future would not be assured. And so the board took a long-term position. The board assessed all the options and opinions that were possibilities that was possible in the current crisis. If we didn't withhold the dividend to protect our customer, the other option was to do a capital call from our shareholders if the situation deteriorated. Knowing that most of our shareholders are also our customers, it would not be prudent to make a capital call at a time like this, when every business is making it all its possible efforts to survive. During such a time, the most prudent decision is to preserve the capital at hand to assure the survival and growth of the bank and our customers. This is the best possible assurance we could give you as our shareholders that the future is safe. If we can all agree to sacrifice our dividends to support our customers for the sake of a more assured future of our investment. Like we said, when we announced the board's proposal to withdraw the dividend, should the current crisis not play out, then and should the economy start recovering sooner, then the board could consider all options available to make peace with the shareholders. The third most popular question reads, based on the implication of COVID-19 on the financials, what is the projected revenue and profit for the next 5 years? What is the worst case scenario should the current pandemic continues? Does the bank have strong shock absorbers to go through the terrain? Again, we could see the diversity in opinion and the depth of knowledge and the depth of concern that you as shareholders have over your investment. Thank you for this question that shows your great interest and concern for our business. You are right that COVID-19 crisis have now become more than a health crisis. It has become a social and an economic crisis and likely to turn into a financial crisis. First, we all know that vibrant businesses is supported by availability of versatile transport means and logistics, efficient service, industry, and public sector that operates at the optimal capacity to support global supply chains and ecosystem in the world that has become deeply interconnected and interdependent. With the health crisis prevailing, all these fundamentals have been seriously compromised. Health protocols such as social distancing, restricted movement of people and some goods, and the fact that a vaccine for COVID-19 is not within sight in the near future, it is very hard to project the future of the global economy. The COVID-19 pandemic is taking a toll on the global Kenyan economy and has significantly reduced economic activity. The IMF revised the global forecast for 2020 from 3.3 down to 4.9% negative. Equity Group Holding has evaluated the economic impact of its own business and businesses of our customers during the lockdown and has adopted an offensive and defensive approach to protect and ensure continuity of business to its customers, staff, and the bank. On the defensive, it has chosen to work with the customers by restructuring their loans to help them navigate the crisis. The pandemic has created uncertainty due to an unexpected and a very fast-changing external environment, and the duration of the pandemic is unknown at this time. The impact of the pandemic on our business will continue to evolve and will keep you informed. However, our analysis shows that the group and its subsidiaries have the capital strength and balance sheet agility and liquidity to support the long-term strategy and work with the customers through the COVID crisis up to a period of 3 years. In addition, the crisis has given the group the opportunity to fast-track its digitization process, and this is on course. We appeal to our customers to make use of the digital channels to conveniently access financial services. And the last cluster of questions, dear shareholders, was what measures have you taken to control the effects of COVID-19 in our business? As we had earlier said, the biggest was to protect the staff and the customers. And we are screening every morning and every day anybody entering the premises. And we have adopted business continuity management program that ensures the risk is mitigated by having 50% of the staff working from home and the other working from the office, and do a rotational program. The second thing we have done is reaching out to our customers and educating them through leaflets on frequently asked questions that has been developed by Equity Afya, our associate company that deals with health. And what we have seen is that their education is that each of us should become the first line of defense. We protect ourselves before we could seek medical support. And the second support is where the bank has moved, put in 1.1 billion shillings to manufacture of PPEs in the country and guarantee all hospitals dealing with the COVID cases with personal protective equipment for a period of up to 18 months. And the last question relates to Trasmala. Is this a deferment or a total cancellation? Again, shareholders, thank you for demonstrating long-term interest in the growth of our business. Thank you for your question that shows your interest in the bank's expansion strategies. As you recall, in January 2020, the board announced the extension of discussion with Trasmala following the expiry of the transaction period before the two parties could sign a detailed transaction agreement. During the extended period, the two parties could continue further discussion to try and reach mutually acceptable commercial terms in respect to the proposed transaction or a variant of it. However, after the declaration of the COVID-19 global pandemic that has put the economy into serious crisis, the board had to immediately focus on business continuity management, that it gears to conserving cash and liquidity and deploying it to support customers survive the economic crisis, to recover and to thrive post the crisis. A strong capital and liquidity position gives us the strength and capacity to cushion our business, accommodate and work with our customers during these challenging times. With this consideration, and after careful consideration, Equity Group Holding and Atma mutually agreed to discontinue discussion on the transaction for the foreseeable future. This discussion is further guided by the board's risk assessment approach, a prudent risk mitigation and management in the prevailing economic slowdown occasioned by COVID-19 in the region and globally. So far, under our business continuity management, which is focused on defensive and offensive mechanisms, we have worked with our customers through loan accommodation and rescheduling, and up to 30% of the loan book for a period of 36 months. So, dear shareholders, so we have discontinued the discussions into the foreseeable future, and Trasmala is free to engage anybody else who may have interest. Thank you very much, shareholders, for giving me a chance to respond to some of your questions. We appreciate there are 200 questions that you have asked, and we'll be sending or we'll be posting all the answers, all the questions and the answers on our website, and we'll reach each of you who had raised a question so that we can specifically answer the question personally. Thank you very much, Chairman.
Thank you very much, Dr. Mwangi. The aforementioned notwithstanding, we have made arrangements for a few people who may be able to ask questions live to do so. So the aforementioned notwithstanding, I wish to invite any members who might have additional questions, I emphasize additional, I think, to ask using the questions button on your live streaming screen. Shareholders who have registered to call in can also dial on the line and submit their questions. You will understand, however, that due to time limitations, we may not be able to respond to all questions raised today, but all questions and responses shall be published on the company's website within 24 hours of the conclusion of this meeting, therefore roughly by noontime tomorrow. If anyone does call, please state your name and tell us where you're calling from. Thank you, and the group CEO will take the questions. Good morning, how are you?
Good morning, sir.
Can you please state your name and where you're calling from, sir?
Yes, my name is Isaac Jones, Mr. Chairman.
Oh, Mr. Jones, we know you well.
Very well, Ansel. I want to start by commending the board and the entire management of Equity Holdings for a well-done job in the year 2019. Mr. Chairman, I want to go further and comment on the bank and Mr. Mwangi's, Dr. Mwangi's donation to the COVID-19 eventuality. Mr. Chairman, our group managing director, Dr. Mwangi, has illustrated and detailed all the integrated report very well. And I would want to commend him on that because all the shareholders, wherever they are, they must have heard Mwangi has come out to explain deeply, especially on the question on the dividend, because the dividend money is being pulled back to the customers so that we have a smooth running of the bank within the next year. And I do approve that. Mr. Chairman, I want to go to questions now.
Yes, please.
Mr. Chairman, we had already been under information that we will be expanding regionally, and the expansion is on hold. Will the group managing director illustrate this and explain it to people to understand why we have that hold? I'm also asking him why he didn't explain our baby branch, regional branch in Sudan, because we want to see Sudan going strong from time to time, and we didn't have information on that. People have not been able to go to the website to read all this information on the integrated report. But nevertheless, let him come out and explain where we stand with the Sudan branch. Mr. Chairman, I also go further and say our retained earnings are growing strong. I know the principle of the board and the group managing director is not to dish out bonus shares. But there are many other ways, because understand we had that 5-year celebration last year, and bonus and shareholders did not enjoy any benefit. We will look forward for your good board to consider in any manner of appreciating shareholders who have been there for over 35 years, who have been supporting bank for the last 20 years. Mr. Chairman, it is a good achievement of the bank for these 20 years and the expansion which has been there. But I also want to ask Mr. Mwangi, what precautions are he putting in measure to the customers coming to the bank and the staff on COVID issue? Mr. Chairman, I want also to extend a question to Mr. Mwangi on our future, which he has already illustrated. What we expect in the next coming year, because there is still this eventuality of COVID, which we don't know where it takes us. We still have lockouts within in the county, and this is already affecting the economy quite widely. Can you explain next step, next move? Thank you very much for those few questions.
Thank you very much, Mr. Zal Jones. We'll take a few more questions first, and then Dr. Mwangi will respond, okay?
Yeah.
Thank you. Hang up. Hello, good morning, sir.
Hello, morning.
Good morning. May I ask
Okay,
your name and where you're calling from, sir?
Okay, my name is Daniel Kemono.
Okay, thank you, Daniel.
Okay, I have a few questions, and first of all, I want to thank the board and the chairman for the well-done job in the year that is under review. Now, I have not been able to watch this live, so maybe I hope that some of the questions that I will ask, maybe the CEO has mentioned, but all the same, let me mention them. Number one, I want to ask, I'm sure the CEO has explained about the Atlas Mala, but let me ask this, that is our dream of having a 1 trillion balance sheet still there? That is question number one.
Okay.
The dream of having a 1 trillion balance sheet.
Yes.
Currently we start at 673 billion. I'm sure we were expecting to have a 1 trillion balance sheet. Number two.
Yes, go ahead. We've noted one.
Okay. Number two, I want to talk about the CEO's remuneration. The CEO's remuneration, equity being the highest market capitalized bank in the stock market, is too little. And I don't know whether the CEO doesn't want to be paid money or it is the board which is a bit stingy. I don't know. Because CEO salary of 56 million compared to the other peers who are getting hundreds of millions, and him is just 56, and it has been like this for long. So I think he should be rewarded nicely for the work he is doing for Equity Bank. So I take exception. I have seen several years his salary has remained like this. So doesn't the board want to compare his salary with the other CEOs and maybe remunerate him accordingly? That is page 109. Number three, it's about the COVID thing and where we are today, and everybody has been affected, including the bank, the businesses. And my question is, what do you think is the worst? We are expecting that the economy will be opened in a week's time, and I don't know as the bank, what do you perceive to be the worst case scenario? Do you think or do you see a situation where you will come to the shareholders maybe to ask for more funding through the rights issue, or the bank is on the right footing as far as the capital is concerned? Maybe another one is the balance sheet. The balance sheet is about the loan and advances to customers, page 119 of 366 billion. I'm sure with IFRS 9 and the way the economy is, I don't know how much of this money maybe you anticipate to be non-performing, because I'm sure the business of the bank is lending the money to the customers, and now with the current situation, maybe you may not be able to lend so that you can get money, or you may get the profit as it used to be. But what do you anticipate in your forecast? Do you forecast a situation where maybe out of this money which has been loaned, maybe to the SMEs, to the large enterprises, maybe some may forfeit or so? What do you foresee? And now, and with that, of course, there is the COVID, there is the interest rate cap removal last year, and yesterday I saw in the paper where Equity has been granted some, I think, 63 billion to be able to maybe to rent. So, as a shareholder or as a Wajiko, let me call myself Wajiko, as a Wajiko, am I going to benefit? Because I'm sure you cannot just go helping or just raiding like this. There must be some controls and something. And some of the most affected people is common man, people with small businesses, mama boga, and all those people. And they are relying on you in the bank here, maybe to help them come up. So maybe with this money which was given, how is the common man, how is Wajiko going to benefit? And now, post-COVID, because COVID maybe will go or they will come and then we adopt to stay with it, do you think that the removal of interest rate cap will bring a benefit to me as a Wajiko or something like that? And then the Tanzanian subsidiary, of all the subsidiaries, it is the Tanzania which has been performing poorly, even posting a loss last year, and it has been doing like that. So what is the challenge in Tanzania? And what are you thinking going forward? Of course, I know even Tanzania, there is COVID and everywhere. But that aside, what has been the challenge in Tanzania? Because it is the one that has been making roads all the year. And then the last one, so that I finish, is of course there I know the bank may not be in a position to make as a lot of money as it made last year or the year before, but maybe the cost still remains. So my question is, how do you plan to maneuver all this? Are you thinking of retrenchment? Are you thinking of as a way of controlling costs, or are you thinking of maybe you're closing some brick and mortar branches, or what do you think? And with this, I'm sure the cost to income ratio, which Dr. has been saying should be maintained at below 50, it will come up. So what is your way forward? Do you think of retrenching, closing branches, or minimizing your operations, which I know many of them are in digital? So thank you very much. Those are my questions. And once again, thank you for giving me an opportunity to call.
Thank you very much.
I have said my name is Kimogo.
Thank you very much, Daniel. We've got, that's a lot of questions, and I will ask, I think we'll stop the live questions, because you have 5, as I count, from Zal Jones, and about 6 or 7 questions here, so a little over 12. I would suggest, Dr. Mwangi, that we close the live message calls for now, and you've made a note of the questions, I believe. We'll let my vice chairman answer the question about the CEO's pay. Thank you very much.
Thank you very much, Mr. Chairman, for giving me a chance to respond to some of the questions. I will answer question number 1 from Nzau Jones, and I will ask the Executive Director in charge of regional expansion and subsidiaries, Mary Wamai, to answer question 2 from Daniel Kemodo, which has quite a number of questions and can leave some to the board. Thank you very much, Nzau, for really appreciating that 2019 was one of our best years. We continued to improve our market share, and during the interest capping period, we enhanced our market share in Kenya from 11% to 13%, and that is what was reflected. We were very bullish, we were very confident about the future, and I'm glad that you have gone through the integrated report, as also Kemodo, who has given us pages to refer to. In terms of regional expansion, hold of expansion, it relates the same with Bwana Kemodo. What does it mean? It just means that the board, looking at the information available at the moment, is uncertain about the future, and hence have decided to be very conservative and very cautious. And as a result, the best it could opt was capital preservation and liquidity preservation, because nobody knows how long this crisis will hold. When this crisis started, we thought it would be a 3-month event, and everybody, including the regulators, asked the loans to be reviewed for 3 months. But looking back, 3 months have ended. We are still in lockdown. We thought in 6 months, a vaccine most likely would have been developed. 6 months down the road, no visible viable vaccine has been produced by the world. And that gives us a huge challenge as to thinking heavily about the future without really focusing on survival, recovery, and thrival. How do you thrive after the crisis have been resolved? And the only way we could do that is to support our customers. We are an aggregator, we intermediate. We take from those who have excess and give those who have deficits. So if you don't support the customers, the goose that lays the egg, then there will be no eggs tomorrow. And so the board consciously decided the best choice, the best strategic option was to support the customers and then leave the purpose. I'm really excited to serve under the current board that really has used the purpose and essence of this organization as the true compass to the true north for this organization. When these difficult decisions were being made, the board asked itself, and what is our purpose as an organization? And it is resolved, it was preserving lives and livelihoods. And it's for that reason the focus then was to support the customers whose lives needed to be supported, whose livelihoods supported by their micro, small, and medium enterprises needed to be preserved, and hence support them to survive and to recover. So that made the board almost hold everything else and focus on what mattered most at this hour. And given limited resources, then we focused on that. But the question of whether we have then deferred the 1 trillion shilling balance sheet, I want to say we are still on track. As I said, in Kenya, we have increased our market share from 11 to 13. What it means is that instead of growing horizontally, we are growing vertically. We are deepening our footprint in each of the countries that we are in. And in particularly, we are very excited about the DRC, where we will be more than doubling our size. And that, when it comes to numbers, will mean we are slightly above 800 billion shillings when that transaction is concluded, and we only need 200 billion shillings to hit our trillion shillings mark. Retained earnings, strong, and what would the board consider things like rights issue, bonuses? A great question. And again, if shareholders, you can recall, maybe let me jog your memory. Since 2002, we have issued 600 shares for every share that any customer held at that time through rights and bonuses. So I believe at the right time, the retained earnings are held to the benefit of the shareholders. But there is always the right time to do those things. Lastly, is the issue of protecting staff and customers. In terms of protecting customers, that is our principal duty, supporting our customers and staff. And I'm glad, if you look at our accounts, our costs, our staff costs have gone up by about between 15 and 18%. Despite the challenges that we foresee, we realize the biggest investment will be to staff. And we did not only look at the staff to enable them to survive the COVID environment, but also enhanced our capacity and competence by increasing the capability through training and poaching a few staff to strengthen the capability of the group. The second one is on customers. Beyond providing for them to survive, the most important is health. And we are extending this service of screening them anytime they visit the branch, so that if there are early warning signs, like high temperatures, then we could prompt them to promptly seek medical attention. And lastly was the future expectations. For once, I want to say that none of us can tell how the future is, because all assumptions that has been made before have not held in just a period of 6 months. And we would like to be in a situation like the World Bank, who are reviewing their projection every month. So all those projections then, because we have always used projections to guide, we are shy this time, but we'll keep you posted because of our quarterly results. And anytime there is a possibility of looking deeper into the future, we'll keep on calling on you. Thank you very much, Ansel, for your great question. I believe it has benefited most of the customers. And I want to ask my colleague, Executive Director Mary Wamai, to take the second question from Mr. Kimotho. Thank you, shareholders.
Thank you very much, shareholders. And once again, we really appreciate your time and the fact that you're able to put aside everything and join us for today's meeting so that we can update on what is going on in our group. We really appreciate that once again. So, Mr. Kimotho, we want to thank you. It's a pity we could not meet at KICC today, but we thank God we are able to communicate either way, virtually. And thank you so much for your questions and following the group on a day-to-day basis. I must confirm, like our CEO has said, that our regional expansion dream is still alive, and we are still on it. It is only that we thought that transaction, we are not going to proceed with it. Now, you will recall that we have asked you to allow us to proceed with the transaction we have proposed for the Democratic Republic of Congo, DRC, and we have made very good progress on that transaction. So what we are saying is that we are still looking at opportunities. I think James told us very clearly that this is the time to identify the opportunities that are available in the market and take advantage. So we are going to continue doing that, and you will see in the next few weeks, we'll be able to update you on what is going on in that respect. So we will go and check for any opportunities. What we have said is that we are focusing on digital growth. We have paid a lot of attention to digital delivery to our customers. We want our customers to be able to access us digitally. It's very, very affordable. It's very convenient for our customers. And that also answers your question on the cost-to-income ratio. How do we manage that? So one of the ways to manage that is to actually make sure that customers can access us through the digital platforms. And there's a very huge effort there. We are led by a very able CIO, Lanley. There are very, very many projects on that, and we can see already the fruits of that coming through in terms of the services being put on digital platforms, enhancing the security for those services and delivery to our customers. I'm sure you have noticed a lot of improvement in that area, and we are continuing with that. Now, specifically to us, to answer the question on South Sudan, I'm sure you have read that there has been progress in terms of peace building in that country. We are still grappling with the issues of high inflation, and what we have focused on right now is the business of supporting the humanitarian organizations. And we've done very well in supporting that country in terms of supporting the humanitarian interventions. We are hoping that when peace is finally found and after the effects of COVID have been managed very well, we should be able to return to the normal operations. But our 6 branches are operational, and we have done very well in terms of managing that subsidiary. We can say that we are okay with South Sudan. Tanzania, you're right, we've been grappling with that subsidiary for quite a while. We have made very good progress. The first thing we did was look at it from a governance perspective. And we have a very strong board of directors and the chairman who came on board last year, took over from our chairman here, David Ansel. He's called Mr. Raymond Bilinyi. He has done very well in terms of supporting the directors to support the management. On the executive management, we have revamped that. We have recently got on board an executive director who is helping us also and helping the management team to look at the strategy, look at the opportunities of that subsidiary, how they stand in the marketplace, and we can already see a lot of progress going on there. I'm sure you know that the issue of NPLs has been a big issue there. We have formed a special committee to support that team to be able to address the issue of NPLs. And we're also looking at opportunities to do business through the ecosystem approach to the market. And we do hope that that will help us to recover some of the revenues we have been losing through non-funded income. And that those initiatives are already taking place, and we are monitoring the situation on a day-to-day basis. We have kept the group board informed of what is going on in Tanzania, and we are on top of things in that subsidiary. So we want to give an assurance that we will keep you informed on the developments in Tanzania. But on the issue of loans and advances, I think James has talked about that, and we will continue supporting the customers. What we have said is that we will help our customers to keep their lights on in the face of this crisis. And what that means is that we help them not just to survive through the crisis, but thrive even after the crisis or during the crisis. So all efforts are there, and we have a team led by Polycarp, our Chief Commercial Officer, and they are doing nothing else other than understanding the various interventions that we can make. And what we are doing is also looking for like-minded groups. I know we are working with associations like the Kenya Association of Manufacturers. We are working with the KEPSA, those kind of groups, just to identify and try to understand what support do our customers need at this time of need, so that we can be there for them. So we expect that we are going to be able to deliver the promise to those customers during these very tough times. So thank you so much for your questions, and as usual, we are always available to answer your question on email, on calls, anytime. Thank you very much.
Thank you very much, Mary. I believe there was a question about the CEO remuneration. And since the my vice chairman is here, and he is chairman of Governance Committee, perhaps you will allow him to answer that question. Dr. Macharia?
Thank you, Daniel, on your question on the CEO, the remuneration. I would not have wanted to address that at this forum, but since you have called it out, I have to raise James and answer that question. I do agree with you that our CEO is being underpaid when we consider the pay of his peers, and he is very hardworking. He has delivered the expected results, and your board actually did start looking at a framework of his remuneration and his rewards for his performance. But that was just before the COVID-19 outbreak. And when the board started the conversation on how we are going to respond, we decided that we would ask shareholders to forego their dividends for this year. We actually requested James, that in the same spirit, we don't review his remuneration this year. And James graciously accepted to lead from the front, but the board is continuing with a review of remuneration and rewards, not just for James, but for our senior management, so that we have a framework of making sure that we reward them as per standard industry reward schemes. And I can assure you that come next year, we will have put in place a scheme that will see our CEO being remunerated for his good performance. So I want, in the same breath, really to thank James, because he did not have to accept the request of the board that for this year, he allows us to maintain his remuneration as it was last year. But James, be assured that the board will seriously look at this issue so that your remuneration will be at par with your peers. Thank you very much, David. Thank you.
Thank you very much, Professor. I believe there may be one or two more questions.
Good morning, Chairman.
How are you?
Chairman.
Can you please state your name and where you're calling from, please?
Chairman, my name's Alois Chami.
Thank you very much.
I'm speaking locked in Busia because of corona pandemic virus.
We understand.
Now, I'm very much depressed with the corona, but I'm happy and very delighted for the presentation our CEO has just given today.
Thank you.
Now, I commend you, I commend the board, I commend our CEO group, all the group people, I commend all the staff and management of Equity Bank Holding. Now, Chairman.
Yes, sir.
Let me just go straight to my question.
Please.
My question it's not a question but observation. Since the board declared no dividend, that one I agree with them because of uncertainty and because of the lockdown of so many things and all that has happened. That one I support you, but I have confidence with our board of Equity Bank Holding. The second question is, now I would like to know other challenges that will face you while we are still in this COVID pandemic virus of this, from this year. We don't know when to end. Because I'm really challenged here in the house, and I know that the bank is also challenged, depressed. So those other challenges that you can explain that they will make our bank go forward. I think those Chairman are the only questions I have, because I would not like to ask many questions about the account, because I know we are all challenged, we are all depressed with this COVID-19. Those are my questions, Mr. Chairman.
Thank you very much. I believe we've got one more caller. We'll ask the CEO to answer your question in a few minutes.
Good morning. Chairman.
How are you?
I'm fine,
Missouri. Can you please give us your name and where you're calling? Uh-oh. Hello. Okay. Thank you. And you're...
Yes, Christine, we can listen now to your question. Yes, Christine, tunakusikiza. Yes, Christine. Haya, utajibiwa. Kuna swali ingine, Christine?
nauliza mnatuambia tuchague wakurugenzi walipe fedha zao, na sisi bado hatujapata, na sisi tumeadhiriwa pia na hii corona. Tungepata sisi mtuwekee dividend kidogo.
Na swali la tatu.
Tatu. Hizo mbili tu.
Haya.
Kitisha wakurugenzi mnasema walipe, na sisi hatujapata kitu.
Asante. Thank you very much, shareholders, for these two additional questions. Thank you, Mr. Chami. Other challenges. There are pretty many challenges along the way, but the biggest challenge that we are confronted with is uncertainty. We make decisions because we have enough information. Corona is still a novel virus that very little is known about. 6 months down the road, there isn't much information as to how the outcomes and how it will play out. But the immediate challenge, Mr. Chami, is to protect our staff. Every day that what keeps us awake is our staff safe? How do we keep them safe? And that is why business continuity management program have been put in place so that specifically the focus is staff. The second biggest challenge is how do we ensure our banking halls don't become areas where corona is spread. And that, again, explains why we have adopted all the medical protocols of ensuring the banking halls are at their best in cleanness, sanitizing equipment, screening of customers as they walk in, screening of staff as they walk in, because our principal responsibility is to ensure we protect our staff and our customers. The third challenge, of course, is to support our government. We, as a leading organization in this country, we have an obligation to support the government to ensure it protects Kenyans. And that is why the bank has been very generous, raising 1.1 billion shillings to support the government. But money is not enough. The second biggest responsibility in supporting government is ensuring we are all observing the health protocols. So our staff are trained on how to observe protocols and how to train customers to observe protocols. That is a daily challenge that we cope with. The fourth challenge is pronouncements by regulators. As we have seen every now and then, there is direction. Like in March, we got a direction to waive all mobile charges, and come end of June, it was extended by another 6 months. That is something we had not factored, we had not planned for, but we have to comply with the wisdom as pronounced by our regulators. So the coping with decisions being made outside the organization. The government, for instance, does a lockdown of Isiri, and we have a branch in Isiri, and we have a lot of staff who work in Isiri but don't reside in Isiri. So those are some of the challenges. Things like transporting our audit staff from one region to the other. Again, so those are daily challenges, but they are not as really priority to us, other than ensuring that we support lives and livelihoods, we protect the businesses of our customers, we ensure as many as possible survive, they quickly recover, and we support them to thrive. So everything we are doing is towards that main challenge, and that our staff continue to be supported. Christine, a very good question on dividend, and it's true, as you have observed, the board has looked at protecting the business, and like you yourself uko nyumbani, vile ukiona kuna kiangazi na mahindi imekauka ama ile ulikuwa umepanda imekauka, unahakikisha ile mbegu ambao ulibakisha hukuli, unaitumia kupanda tena. Kwa hivyo bodi ya Equity ilionelea vyema kuhakikisha benki ya Equity miaka ijayo itakuwa na nguvu, kwanza wakati huu kuhakikisha customer wote tumetembea na wao, tumehakikisha kama vile Mile alisema mataa ya biashara zao iko gagari na wataenda juu ya hii shida tukiwa pamoja. Kwa hivyo kwa sababu miaka 15 ambayo imepita, hakuna mwaka hata mmoja ambapo tulipokosa kulipa dividend. Tukisupport customers watatuwezesha mwaka ujao na miaka ijayo mingi kuhakikisha Christine utaendelea kupata dividend. Asante sana kwa swali lako Christine. Asante.
Thank you, Dr. Mwangi. I think we'll carry on now with shareholders. In the next few minutes, voting shall continue. It has already been open for 48 hours, and prompts have been sent out to all of you to cast your vote, either via the USSD option or web link as duly registered. The web link shared to stream the meeting contains a voting tab. Once you select to vote, you will be able to key in the code received via SMS and proceed to follow the prompts. The voting process is being overseen by our external auditors, PwC, and results of the AGM voting shall be published within 24 hours following conclusion of this meeting. I hereby call upon the company secretary to read the resolutions to be passed.
Thank you, Mr. Chairman. Our first resolution is relating to the consideration of audited financial statements for the financial year ended December 31st, 2019. The resolution reads as follows: to receive, consider, and if thought fit, adopt the audited financial statements and directors' remuneration report for the year ended December 31st, 2019, together with the chairman's, directors, and auditors' reports thereon. Noting that subsequent to the approval by the directors withdrew the proposal to declare a dividend as communicated in the public notice by the company dated May 26, 2020, and reflected in the unaudited financial statements of the company for the period ended March 31st, 2020. This resolution has been proposed by Patrick Karanja and seconded by Francis Nganga Gishero. The second resolution relates to the remuneration of directors. To approve the remuneration of the directors for the year ended December 31st, 2019. This is proposed by Dorcas Ngoi Mwakio and seconded by Titus Njuguna Njoroge. Resolution number 3, election of directors. To approve the appointment of Mrs. Evelyn Rutagwenda, who, in accordance with Article 100 of the company's Articles of Association, retires from office by rotation and, being eligible, offers herself for re-election. This is proposed by Amos Chwea Manani and seconded by Nelias Wanjiko Kanyiri. Resolution to elect directors number 2, to approve the appointment of Mr. Christopher Newson, subject to obtaining regulatory approvals, and who, having been appointed by the board on March 4th, 2020, in accordance with Article 101 of the company's Articles of Association, retires and, being eligible, offers himself for appointment. This resolution has been proposed by Millicent Agneta Anjiri and seconded by Belinda Mudhoni Kome. Resolution number 4, ordinary business. In accordance with the provisions of Section 769 of the Companies Act 2015, to approve the election of the following directors, being members of the Board Audit Committee, to continue to serve as members of the said committee. Mrs. Evelyn Rutagwenda, Mr. Vijay Gidomal, Dr. Helen Gishohi, and Dr. Edward Odundo. This resolution has been proposed by Julius Mutegi and seconded by Eunice Wanjiko Kamau. Resolution 5, to pass an ordinary resolution pursuant to Section 721 of the Companies Act 2015 to appoint PricewaterhouseCoopers as auditors of the company, taking note that auditors have expressed their willingness to continue in office, and to authorize the directors to fix their remuneration. This resolution has been proposed by John Wairi Wandugu and seconded by Mary Wangari Njuguna. Resolutions falling under special business. Number 1, to amend Article 54 of the Articles of Association of the company and create a new Article 54A of the Articles of Association of the company to allow for simultaneous attendance and participation by electronic means for general meetings, including annual general meetings and extraordinary general meetings. The details of the amendment are contained in your notice of this AGM. This resolution has been proposed by Simon Gitau Muhia and seconded by Amayoti Mutire. This resolution will be passed as a special resolution. Resolution number 2 under special business, and this is an ordinary resolution relating to the acquisition of Banque Commerciale du Congo, and it reads as follows: to approve, confirm, and ratify the purchase by the company of 625,354 ordinary shares in the capital of Banque Commerciale du Congo, BCDC, and this comprises 66.53% of the share capital of BCDC. The purchase is inclusive of dividends declared after January 2019 in respect of the financial year ending on December 31st, 2019. And this is a cum dividend price per share of $167.9 per share. The purchase is for Mr. George Arthur Forrest for a cash consideration of $105 million. The second ordinary resolution and the special business of the previous resolution, shareholders, has been proposed by Peter Njenga Ngome and seconded by John Wanga Otwoma. The second resolution, dear shareholders, under ordinary business is an ordinary resolution and relates to the incorporation of a non-operating insurance holding company and a subsidiary for purposes of conducting insurance business in Kenya. The resolution reads as follows: to approve, subject to obtaining the requisite regulatory approvals, the company setting up a non-operating insurance holding company to serve as a holding company for insurance business and a subsidiary in Kenya to conduct and undertake long-term insurance business in Kenya, and putting in place all the necessary structures, commercial arrangements, and any ancillary arrangements relating to the undertaking of long-term insurance business in Kenya. the resolution proceeds to seek approval to include that the company provide 400 million shillings as share capital for the subsidiary as required under the Insurance Act. The resolution has been proposed by Alex Mwangi Karanja and seconded by Teresia Wangoi Ndongo. Thank you, Mr. Chairman.
Thank you, Madam Secretary. Voting has been open, as we said earlier now, for over 2 days. We had originally proposed to close voting at 1 p.m. today, but to give everybody a chance to make sure they vote properly, we're now proposing to close the voting at 2 p.m. today. We do request you to please vote. We shall display on your screens a video clip on how you will be able to cast your vote. So please proceed to do so.
If you have multiple accounts or are holding proxies on behalf of other shareholders, you'll be alerted to vote for the various accounts consecutively. For Equitel subscribers, dial *482#. For all other networks, dial *483*807#. You will receive an alert to choose the language you prefer. Dial 1 for English or 2 for Kiswahili. You will receive the message, "Welcome to Equity Group Holdings PLC AGM." You will then receive an alert indicating the accounts you have registered with your number. Reply with 1 to vote using the first listed account. Upon responding, you will receive the alert to approve director's remuneration. Reply with 1 if in favor, 2 if against, or 3 to abstain. Follow similar alerts for all other resolutions. If you have multiple accounts, you'll be prompted to vote until you have exhausted them. Once you have voted, you will receive a confirmation in your name. Voting will close at 1 p.m. on Wednesday, 30th June 2020. The results of the voting will be published in 2 daily newspapers and on the Equity website by Friday, the 2nd July 2020.
Karibu katika mkutano mkuu wa Equity Group Holdings PLC. Pindi tu kupiga kura kutakapofunguliwa, utapokea msimbo kwenye simu yako na miongozo ya jinsi ya kupiga kura. Ikiwa una akaunti nyingi au unashikilia wanahisa wengine, utahitajika kupiga kura kwa kila akaunti ambayo unashikilia kwa mfululizo. Hivi ndivyo utakavyopiga kura. Kwanza, utapokea agizo kwenye simu yako litakalokueleza ubonyeze msimbo. Fuata maelezo ya kupiga kura. Ikiwa una akaunti nyingi au unashikilia nyingine kwa niaba ya wanahisa wengine, itakubidi kupiga kura kwa akaunti hizo tofauti mfululizo. Kwa wasajili wa Equitel, piga *482 alama ya reli. Kwa mitandao mingine, piga *483 *807 alama ya reli. Utaulizwa kuchagua lugha inayokufaa. Chagua 1 kutumia Kiingereza au 2 kutumia Kiswahili. Utapokea ujumbe, "Karibu katika mkutano mkuu wa Equity Group Holdings PLC." Kisha utapokea ujumbe utakaokuonyesha akaunti ambazo umesajili na nambari yako. Jibu na 1 kupiga kura ukitumia akaunti iliyoorodheshwa ya kwanza. Baada ya kujibu, utapokea ujumbe, "Kukubali malipo kwa wakurugenzi." Jibu na 1 kukubali, 2 kukataa au 3 kuazilia. Endelea kufuata mchakato kwa hoja nyingine. Ikiwa una akaunti nyingi, utahitajika kupiga kura hadi utakapomaliza. Utakapomaliza kupiga kura, utapata thibitisho kuwa kura yako imepokewa. Upigaji kura utafungwa saa 7 Jumatano tarehe 30 mwezi wa Juni mwaka wa 2020. Matokeo ya kura yatachapishwa katika magazeti mawili makuu nchini na katika tovuti ya Equity kufikia Ijumaa tarehe 2 mwezi wa Julai mwaka wa 2020.
As I had indicated in my report in the integrated report, I have at this meeting retired from the board of directors. I have enjoyed working with the board and management of the group and subsidiaries to deliver on the mission and vision of the organization, and I am very proud of what we have achieved together. May I take this opportunity to introduce the incoming chairman, Professor Isaac Macharia, to say a few words. Dr. Macharia.
Thank you, David. Ladies and gentlemen, it is my distinct honor to stand before you today as the incoming chair of the Board of Equity Group Holdings, taking the baton from my good friend, David Ansel. I want to thank David for his capable and adept leadership of the board. During his tenure, the board has been ably guided to support the company and its goals to achieve excellence in both profitability and purpose where it has exceeded expectations. Prior to becoming Equity Group Holdings board chair, David served the company on the subsidiary boards of Equity Bank Tanzania, DRC, Uganda, and Rwanda, where he also served as the board chair. In Kenya, he served as a member of the board of Equity Bank Kenya, where he chaired the credit committee and the risk and asset and liability committee. David is a long-term global banker. While on the continent of Africa, he has also served as a former chief executive officer and managing director of EcoBank Transnational, and as the regional director of Citibank. It is this deep experience in banking that David brought to the boards of Equity Group Holding and the subsidiary boards. I now want to thank the board of directors for having faith in me and for finding me fit to take the mantle of leadership for the group from David Ansel, who was the second chairman of the board of directors. May I also thank the shareholders who elected me to the board of Equity Bank Kenya 6 years ago. And I would also like to thank the board of Equity Bank Kenya, where I have been chairman for the last 4 years, and where I feel I have learned a lot that has prepared me to take on the appointment that is being bestowed on me today. I want to acknowledge that my tenure begins at a very extraordinary time in the history of our world. There's no playbook for the uncertainty we now find ourselves in, but we do have the capability in our hands to think strategically and act deliberately to ensure that the company and our stakeholders strive to achieve the excellence we are known for and the stability and focus we need not only to come out of COVID-19 successfully, but to thrive thereafter. I take this opportunity to thank each of you once again for participating in today's meeting. Thank you and stay safe. Within the scope of my focus, it will be my mission to provide leadership that will guide the group to achieve its ambition to become not only a Pan-African financial services provider, but also the best in its class. In addition, I will jealously guard the tenets of good and effective corporate governance so that we leverage on the synergies of a diversified board and the deep strength of our executive management team to live up to our purpose of being transformative in a socio-economic sphere. Thank you, Mr. Chairman, for the opportunity to address this forum, and I wish you all the best in your next life endeavors. Thank you.
We're closing this meeting in a second. I will ask our bishop to please say a prayer in honor of all of us. Thank you.
Shall we pray? Everlasting Father, in the name of your Son, Jesus Christ, we want to thank you for the wonderful meeting that we have had together today in our 16th annual general meeting. We want to thank you for all that you have done for Equity Group Holdings. We bless you because we are where we are by your gracious hand and by your unfailing help every year. We bless you even at this time when we are going through the COVID-19 pandemic. We want to thank you because you are always with us and you'll take us through protecting each one of us so that we can go beyond this pandemic, and as we have said, that we'll be able to thrive. We want to thank you for the board of directors. We thank you for the chairman and the incoming chairman. We also want to thank you for the group CEO and the MD. And we also want to thank you for the management in all the subsidiaries. We want to bless you so dearly for all our shareholders, wherever they are. Lord, how we pray that you protect them, lead them, and open up opportunities for them to move on. We bless you and we thank you, looking forward to an open door where we'll be able to expand and continue, for you are bringing this pandemic to an end for the glory of your name. We bless you and we thank you. For this we pray in your holy and precious name. Amen.
Thank you all for coming. Stay safe.